Hi, this is Brian from KineticTrader.com, and here is a quick look at a trade I was considering even with the downward market, just trying to give you an idea of maybe what someone would look at. Everyone has their own version of how they trade or how they evaluate trades, but I thought this might be helpful just to show a couple ideas of what I was looking at and some of the ideas you could do with involving options. And realize obviously that options do involve risk. This is strictly for informational purposes only, and no recommendations are made here. So here's the Thinkorswim account. I paused it back on September 22nd, 2011. You can see the S&P here was really just falling apart here. Everyone concerned about the euro and the default and all these things, and people were saying maybe the market was going to just crater even more, but it was starting to look pretty oversold. It's always hard to guess which way things are going to go when you have big news and macro things driving the market, and generally I would never ever recommend dealing with stocks, buying them when they're selling them, or shorting them when they're this oversold, and buying them when you have this much uncertainty and there's no trend in place, because the market's been kind of whipsawing all over the place, as you can see here. And this just shows you how some of these indicators that people use for oversold or overbought. This is the RSI. This is a 5 period, so this is shorter term than what a lot of people use. A lot of people use a 14, but the RSI 5, people might be saying, oh, it's getting pretty far oversold, but this just goes to show you oversold can always stay a lot farther oversold. Back here, you can see when it was starting to get oversold here, it continued, and the S&P went from 1,300 all the way to 1,100, still remaining in oversold. So definitely not a great indicator, but I do like to use it for individual stocks. I was looking at Netflix because the stock was just falling apart. Everyone was making issues about the change in their pricing plans, and that they were announcing that they'd had a shortfall in new subscriber count. And some analysts were saying it was starting to get a good value, and I was kind of staying away from it because these story stocks, when they get at high valuations, once they fall, people are jumping over themselves to get out of it. So I was kind of considering maybe with the high volatility, maybe dealing with some options in it. And the reason I kind of thought about it is, if you look here on a real time, or this is the paper money account, allows you to use these profit charts, which I generally think look a little more cleaner. But Netflix here, this was before this time frame, but this was here when it was falling apart on the 22nd. It was starting to stabilize here, and the reason I was paying attention to it is it's always important to evaluate a longer term chart. And you don't notice on the short term chart, but if you actually look back on a longer term period, you can see that it's at pretty significant support before this whole run was made. So this obviously was resistance. It kind of pulled back and shot through it and bounced on what was former resistance, became support, and then just really took off. So it is down here at a pretty good support level. It was quite oversold, and with the S&P, as I just showed earlier, kind of still falling apart, Netflix was starting to show some stabilization and look like it maybe could at least bounce from these levels. So an idea would be to maybe look at some option trades, and the issue was the volatility was so high that I'd be nervous ever buying the stock and trying to buy a put to protect it, because you're overpaying so much for the put that if the stock starts moving up, you're going to see a huge decrease in the volatility, and therefore you could lose on the position with the devaluation in the put despite the stock moving up. You could sell a call against it and sell some of that volatility. That would be an option. But rather than tying up a bunch of money and the risk of the stock falling down more and being stuck in a trade that you're trying to just get yourself out of, I was just looking at short term. The weekly's coming up. This was back on Thursday, the 22nd, and with the Friday coming up, the weekly's had a lot of volatility in them, and you're going to see a pretty big decrease if you dealt with out of the money. So the reason what I took was I looked at, with a 1 day left, you could sell a 125 put and buy the 120 for a credit of 116, versus if you had dealt with something like the October, which was 29 days out, you're only getting 197. So my assumption was, with that big support level I just showed earlier, if it held there, I could get the 116 credit with only a day left, and even if with the market stabilizing here overnight, I'd see at least a pretty good improvement. And so that was how I was evaluating it. So you can see options have a lot of opportunity.